Well, hi guys, welcome to this Money Control live stream. It's a fairly wet morning here in Mumbai, raining cats and dogs, and of course, there's a red alert here. But of course, in terms of global cues, things are looking pretty mixed. The GIFT Nifty is hinting at a positive start after the stellar rally that we saw yesterday. Although we did cool off from the day's high, but let's see whether or not we can build on that momentum and see 25,000 back on the charts on a closing basis. So that's the focus area today. In terms of stocks, not much to watch out for. Some stocks like Trent, Vedanta, Hindustan Zinc, Vodafone Idea, these are some of the stocks that have been focused. But on the headline indices front, 25,000 will be closely watched out for. Also, in terms of the Nifty Bank Index, it didn't really fire up that much if you compare it with the likes of auto or consumer durables for that matter. So yes, that index also needs to fire up for the Nifty to sustain those 25,000 levels on a closing basis. In terms of global cues, GIFT Nifty hinting at a very muted start. It was trading with a positive bias last time I checked. But yes, we are looking at a positive open as of now. In terms of Wall Street, Asia, mixed picture. And of course, the focus overnight was on the meeting between Ukrainian President Zelenskyy and, of course, US President Trump. Some updates from there as well. We'll get you later on in the program. But of course, lots lined up. All your stock related queries will be in focus. Keep them coming in. We'll get in our expert to address those queries and help you navigate your holdings. But before we move any further, let's quickly take a look at the top headlines at this hour. Well, Wall Street ended flat with a negative bias as investors await key speeches from Federal Reserve officials at the Jackson Hole Symposium and retail earnings later this week. Asian markets trade mixed as traders assess outcome of President Trump and Zelensky's meeting at the White House. The GIFT Nifty indicating a mildly higher start for our market. Crude oil prices settle a percent higher after talks between Trump and Zelensky. Gold prices hold steady as investors await the Federal Reserve's annual symposium later this week. US President Donald Trump hosts Ukrainian President Zelensky at the White House along with other leaders from the European Union and NATO. Zelensky signals openness to three-way meeting with Trump and Putin in an attempt to end the war. Trump also dials Putin after discussing security guarantees for Ukraine and suggests Ukraine formally cede Crimea to Russia. But just want to say that reports suggest that Putin has also agreed to a meeting with Zelensky. No confirmation from the Russian side, but NATO Secretary General has said that Putin has agreed to a meeting with Zelensky. And Prime Minister Narendra Modi chairs a meeting with top ministers, secretaries, and economists to discuss the roadmap for next generation reforms across all sectors, which will boost ease of living and ease of doing business. Well, then, heavy rains batter Mumbai. In fact, there's a red alert that's been declared by IMD as well. Schools and colleges remain closed in Mumbai, Thane, Mira Bhayandar, Panvel, Kalyan, and Dombivli for today. All right, then, looking at a flat open for our markets. So just quickly getting you a recap of what really happened yesterday. GST reforms announced by PM Modi on Independence Day, provided the much needed booster shot to the bulls. We saw 25,000 being clocked in intraday trade, but we cooled off from the day's high. In fact, even ended below that 24,950 mark. That, by the way, happens to be a crucial resistance for the Nifty as well. We'll need to close above 24,950 or 25,000 for a sustained up move. But in terms of the broad end of the market, they were in fine fettle. We saw mid and small cap indices gaining in excess of a percent apiece. Autos, hands down, were in charge yesterday. Of course, in top here, the Nifty Auto Index hit a record high that was up 4%. Same goes for consumer durables. That index was up 3.5%. Most of the sectors were trading in the green. Even Bank Nifty ended higher by 0.5% or so, but relatively underperformed all the sectors that I mentioned. But defenses were sitting out yesterday. So IT, pharma, they were, in the red at the end of the day. If you look at some of the stocks like iShares, M&M, even Maruti for that matter, good gains coming in on all of these auto names. A combination of two-wheelers, four-wheelers, even tractor makers and CV makers like Ashok Leyland for that matter, hit a fresh high post earnings. AC, fridge, These are some of the stocks that were in focus. We saw PG Electroplast that was battered out of shape after its first quarter earnings, so that also staged a good comeback on the hopes of good demand for ACs. So we saw some of these white goods stocks also doing well in yesterday's trade. In terms of foreign flows, some bit of buying, although not a very big amount, 550 crore rupee worth of buying by FIIs in the cash market. But remember, so far in the month of August, they've already pulled out over 21,000 crore rupees from the Indian market. DI buying support continues. 4,100 crore rupees worth of stocks bought in the cash market. If you look at some of the stocks that will be in F&O ban today, PG Electroplast, RBL Bank, Titagar, all these continue to be in F&O ban. But PNB Housing, that stock will be in focus. It has exited the ban list today. Of course, we're also awaiting the announcement in terms of the new CEO of the company. So that will be another catalyst for the stock as well. Look at the Nifty put call ratio. Just dropped to 1 vis-a-vis 1.01 in the previous session. But all in all, that was how the texture of the market shaped out yesterday. But to understand how things are looking like for today and for the rest of the day, for the week, let me bring on board Ajit Mishra of Religare Broking. Ajit, lovely chatting with you. Good to know that you're in Delhi because in Bombay, the situation is quite bad in terms of rains. But it was a deluge of gains on the Lal Street as well yesterday. What does it look like? 25,000 remains elusive. But today, would you believe that there is case for the Nifty to end above that crucial level?
Yeah, good morning, Nandita. So yes, yesterday it was needed a relief because last week, though we've ended, in positive means we gained roughly around 1% after 6 weeks of consecutive decline. But it was not very decisive move in the index till last week. It was just like, keeping the head above the water. Yesterday it was a decisive, rebound or recovery because we've crossed the first hurdle of 20 EMA, which is placed around 24,750, 800 mark, and we've tested the first resistance around 25,000 as well. So though we couldn't sustain or surpass that level decisively as the day progressed, and we've ended closer to around 24,876 area. So it seems like, Nanta, that bulls are still cautious, means they are, in a wait and watch mode, waiting for more confirmation. And it's natural considering that after almost 1.5 months of corrective tone, they feel that, sustainability is the key. And, going ahead also, we believe that 24,750 now is the key make or break area. Until we break this mark, possibility of further recovery is high, but it's going to be gradual basis that IT is still in the back foot, which holds considerable weight. Banking also, we are not seeing any decisive move. Means yesterday it was less than 1% kind of move in banking index, so it underperformed the benchmark. So both these key sectors is something that they should align. At least we should see some pause in IT. Then only we can see a decisive move over 25,000 mark, which could help the index to inch toward 25,250. So as of now, yes, it's a buy and dip market as long as you are holding above 24,750 mark.
Okay, a buy on dip market as long as you're holding 24,750. In fact, we are holding 24,70, and of course, the up move will be gradual, however. But what about autos? We talked about banks, that needs to fire up. IT, of course, has not really fired up, but autos did fire up, and they were in top gear yesterday. But would you say that the much of the GST related up move has played out, given the fact that stocks rallied 8-9%? Or do you think it's a fresh breakout? What are the charts signaling?
So yes, Nanda, in fact, if you see in past 6 weeks also, the damage was marginal in the IT pack. Means we were seeing more of consolidation in the IT majors. That's why the index was also hovering in this very tight band, close to around 23,500, 24,200 zone. And yesterday, like you have rightly mentioned, that most of these stocks were up in the range of 6 to 8%. And the good part is that majority of the counters are trading at the record highs. So within the rate sensitive pack, definitely auto is likely to outperform in days or weeks to come. This kind of indication that we have. So I doubt that it's not a single day move. Yes, we can see a pause, a consolidation after a strong surge like what we had yesterday. But the tone is likely to remain positive, and stocks like M&M, iSure, Maruti, TVS, they are the one within the auto space which are likely to outperform.
Hmm. Okay, just about a minute to go for the market to open. Any recommendations? Let's get that out of the way for our viewers. What would you be
Yeah.
recommending?
Yeah. So, after this recent move, we should be like, slightly selective, means stocks which are, sitting on the sidelines and now showing sign of strength. They were, anyways, were like, comparatively stronger. So, Bharti Airtel is one name, wherein we've seen marginal dip post numbers, and now the stage is set for a recovery. So, 2010 is what we are eyeing in the near future. So, one can accumulate Bharti Airtel at current levels with 1850 as a stop loss. And Indian Hotel, almost after one year of corrective tone, has finally ended this phase, and we are eyeing 820 mark in the near future in Indian Hotel. So with stop at 760, one can accumulate Indian Hotel too.
Okay, Indian Hotel and Bharti Airtel, two recommendations coming in from Ajit. With that, we're looking at a positive open on the Nifty, 24,919. That's where we are at the current juncture. Quiet start, but let's see whether we manage to build on from here or not. Sensex up 45 odd points, so no big moves, but that was anticipated, right? Given the fact that the GIFT Nifty was sitting at flattish cues. At the current juncture, the mid-cap index is up somewhere around 0.3%. The advance decline ratio yesterday was also in favor of gainers. It was almost 2:1. Today as well, it's 1140 advances to 434 declines. That's the picture when it comes to the market breadth. Sectorally, the Nifty Bank Index is once again on the back foot. It's opened the day in the red, but let's see if it manages to edge back into the green or not. Uh, in terms of other sectors, want to see what autos are doing. Mildly higher, 0.2% kind of gain coming in on the auto index. FMCG also extending some of those gains. IT once again on the back foot. Metal Pocket was up yesterday in excess of 1%. Today they're extending the gains as well, 0.3% higher on the metal pack. In terms of pharma, that's also trading in the green yesterday, mind you. Pharma was in the red, and that was after being the best performing sector last week. So we saw some bit of profit taking on the pharma pack yesterday, some bit of buying emerging in early trade today. Look at the realty pack, that's also trading in the green, and you have the consumer durables index that's also in the green. Oil and gas pack up 0.3%. Remember, HPBP's IOC were in the red yesterday, given the fact that sources were suggesting that petroleum products will remain outside the ambit of GST. I think some reaction on OMCs yesterday on the back of that. And today, crude prices have once again edged back above that $66 per barrel mark on the Brent. Some bit of weakness should be there on some of these OMCs like IOC. Yes, IOC in the red, BPCL as well. No, BPCL bucking the trend up 0.7% or thereabouts. But let's take a look at the individual movers then. Reliance Industries, that's the top index gainer, up 1%. Bharti Airtel, that was Ajit's recommendation, up 1%. NTPC, Tata Consumer, Eternal, Adani Ports, Nestle, Tata Steel, Ultratech Cement, Bajaj Auto, Eicher Motors. These are some of the other gainers. On the flip side, I can see some private banking names under pressure, the likes of Axis Bank, Kotak Bank, even HDFC Bank and ICICI Bank. So yes, banking names are clearly under pressure. Even IndusInd Bank, for that matter, are trading in the red. Even SBI from the PSU banking lot is among the laggards today. Aside of this, HCL Tech Infosys extending losses. Shriram Finance, that was a good gainer yesterday, has succumbed to some bit of profit taking today. But Ajit, talking about some of these names like Bajaj Finance and Shriram Finance, yesterday they saw good pop, right? Perhaps in anticipation of higher demand for credit, right? Any thoughts on some of these names, Bajaj Finance, Shriram Finance? Which one would you prefer?
Right. So, Nanta, post numbers, we were seeing most of these stocks from the NBFC basket also trading a bit of lackluster, means they were days of profit taking also. But comparatively, if you see that Bajaj Finance is among the top performer within the space, post this marginal dip towards its long-term averages, the stock has rebounded very strongly. We have a gap around 940, 945 area where the stock might face resistance. So we are still like decent upside, roughly around 40, 45 points up from the current area. So yes, one can continue to hold the long positions with 880 as a stop loss in Bajaj Finance. Shriram Finance, on the other hand, looks sideways to me. Means there could be further consolidation with the bias slightly on the negative side until we reclaim 645 decisively. So among these two, I believe Bajaj Finance is a better candidate. Alongside with that, smaller names like LTF and AB Capital are some of the names which one can consider, wherein we are seeing noticeable strength.
Hmm. Okay, that's the view on some of these NBFC names. But I want to talk about Reliance Industries. The stock is in focus. It's among the top gainers on the index. Hasn't really fired up in the last 1 month. We've seen 1.5% kind of a cut on prices of Reliance Industries. But today it's in focus given the fact that Reliance Consumer Products is foraying into healthy functional beverages. Also, Reliance Jio is discontinuing its 1 GB per day entry plan. And, certain brokerages are bullish on Reliance Industries, the likes of Jefferies. Uh, they are positive on the stock. But what are your thoughts? Do you think we could see a sustained upside here on because the stock hasn't done much in the last 1 month? Before you answer, just want to give our viewers a disclaimer. We are a part of Network 18, which is owned by Reliance Industries. So if you want to invest in the stock, please consult your advisors. Of course, we are not giving a buy, sell, hold recommendation on Reliance per se. But Ajit, your thoughts on where the stock is headed from here?
Right, so Nandita, if you see that from the highs of around 1540 to close to around 1340 kind of recent lows, it's a decent correction. Means the stock retraced towards the long-term averages, formed a base, and now we are seeing recovery. Today it's a decisive day. Means we are up roughly around 2%. We have reclaimed the short-term, medium-term averages. Volumes are decent so far. So this indicates a potential of short-term trend reversal, which could help the stock to inch toward 1460 to 1480 area. So yes, one can definitely look for long positions, considering that we are seeing rotational buying across sector. So it could be a day for Reliance and maybe for a week. We can see this momentum continuing. So 1380 with that as a stop loss, one can definitely look at Reliance for long positions with 1460, 1480 as a target zone.
Okay, that's a view on Reliance Industries. But let's also talk about some of these, OMCs. Of course, they were in focus yesterday. Today, I think BPCL was trading in the green. But we have queries on our feed on the OMC basket. This one's coming in from Debu K, and he wants to know of course, what happened to stocks like BP, HP, IOC yesterday? Of course, as I mentioned, perhaps the reason for weakness was the fact that GST OMCs would continue, or petroleum products will continue to be outside the ambit of GST. That's of course source based. Perhaps that's why the stocks were reacting yesterday in a strong market. But today we have cues in terms of the crude prices as well, right? They've moved above that $66 per barrel mark. Uh, and any recommendations or any thoughts on some of these names like BPHP and IOC?
So, Nandita, we feel that consolidation is more likely because, of late we were seeing that most of these stocks made an attempt to recover, means they crossed their short-term averages, but they couldn't sustain. So that holds true for the entire pack. And within this space, BPCL definitely, looks comparatively stronger, when it comes to the price action. And probably around 305, 310 is the area basically where we have the immediate support. So maybe we can see this consolidation continuing in this range of around 305 to 325. So near-term outlook is something that one should refrain from any aggressive long at current levels. In case if you have an existing position, you can continue to stay put with 305 as stop loss, and around 325, 330 zone, you should look to book profits.
Okay, that's a view on the OMC basket. Hope that answers your query. I want to get in your thoughts on another stock that is in focus, Gokuldas Exports. Now, of course, the center has removed 11% import duty on raw cotton till the 30th of September. Now, this has come as a boost for some of these exporters, right, that were already reeling because of Trump tariff tantrums. So we've seen a good up move on Gokuldas exports today. The stock is up somewhere around 3%. Last 1 month, it has shaved off 20%. But today's move has taken the 5-day move to 6% or so. Is it a good time to enter these stocks, or would you say that till the tariff uncertainties out of the way, some of these stocks are an avoid right now?
So I feel that those who are holding the long position, they can consider to hold. But for fresh buying, one should refrain because the trend has not reversed yet. Means broadly we are still seeing consolidation. Of late we have tested the lower band and that too on a weekly chart around this 675, 670 area. And upside 775, 780 is something where we have the short-term averages placed. So that could act as the immediate resistance. So for those who have an existing position, they can maintain with 725 as a stop loss, and around 775, 780, they should review their positions.
Hmm. Okay, that's the view. But before I go on and take up more queries, what are your thoughts on PG Electroplast after yesterday's up move? The stock continues to be in F&O ban as well, and we saw 35% being shaved off in a matter of 4, 5 sessions. But yesterday's move, does it signal any kind of turnaround, or was it just like a dead cat bounce, if I may say so?
So yes, post numbers, the decline was almost vertical, and now we are seeing bit of a stability, but it's still not out of woods. Means we need at least a week or 10 days kind of a consolidation, and the stock should hold above 570 area. Then only we can see some meaningful recovery towards 625, 630 in days to come. So as of now, it seems like a difficult task considering that 570 is where we have the multiple resistances and we are very close to that mark. So fresh buying is something that you should refrain. But considering that we are seeing recovery across this consumer durable basket, so maybe close to around 515 as a stop loss, you can continue to hold your position, and around 575 you should review.
Hmm. Okay, that's the view. Those are the levels where perhaps you can review. A couple of queries on Suzlon as well. Sri Raksha wants to know whether it's the right time to buy Suzlon, and even Naveen has a query on Suzlon. The stock has been under intense selling pressure, right? Last 5 sessions, uh, 8%, even last 1 month, it has been correcting 58, 59. That's where it's perched. Do you think it's a good time to buy, or is it in a downtrend and perhaps there could be better stocks to look at in the current scenario?
Nanda, last trading session was definitely a bad one because we slipped below the long-term averages decisively with volume. So obviously now this hurdle close around 60, 61 is going to be a strong resistance area for the stock with support at 55, 52. So as of now, I believe that consolidation is more likely in the near future. So in case if you have a short-term view, you should avoid any fresh long position at current levels. In fact, you should wait for any dip around 55, 52 range, then only you should consider with 50 as a stop loss and 60, 62 as a positional targets.
Okay, that's the view on Suzlon. Hope you've taken note of the levels that Ajit mentioned. But Ajit, pointed query on Infosys from Gitu Sandesh. What should be done? We discussed IT stocks at length, but for the very short term, is it worth a look, Infosys?
Samantha, we have had attempts of recovery in forces also of late, but the first area of resistance around 1475, 1480 zone is something that the stock is resisting. Though we are not seeing any major decline either, so which is definitely a sign that there could be a potential consolidation, before the trend reversal. So if you have existing position, you can continue to stay put with 1410 as a stop loss. But for fresh buying, one should wait for a close above 1475, 1476. Then only we can see some meaningful recovery towards 1550, 1600 area. So as of now, consolidation is more likely, and in case if it pauses, then only it's also a positive indication for the IT index. But as of now, indications are mixed. When it comes to the IT majors.
Okay, that's about it. That's about Infosys. Hope that answers your query. But I spotted a query on Lakshmi Organics on our feed. I think it's coming in from Payal Kalra. She wants to know whether it should be held or sold at a loss. But the look at the price action. Today is well up 6%. Last 5 days it has rallied 25%. Although it's still 100 odd rupees away from its 52-week highs. Should they hold on? Is it in an uptrend now? What are the charts signaling?
So no, trend is still down, and for trend to reverse, we need a decisive close about 250 mark. So still, yes, we are very close to that mark. So means we are very close to the resistance. What she should do is now to maintain a trading stop. So today's day low, close to around 220, 222, is something that you should maintain as a stop loss. And once we reach to around 250 mark, you should trail your stop loss to 240 area. In case if it surpasses 250, definitely you can hold it for 275 or maybe higher. So as of now, it's a hold, but avoid fresh buying.
Avoid fresh buying, but it's a hold. Hope that answers your query. Ajit, I wanted your thoughts on a trend as well, showing some signs of uptrend, right? 2-3% kind of a move, no big moves though. But the stock is in focus given the fact that its fashion label Burnt Toast has opened its first ever store in Gujarat, in Surat. But given the recent price action, no fireworks. The stock, of course, was a showstopper last year, but came under intense selling pressure post that. Any directional move expected, or would you expect it to remain lackluster?
So Nanta, it's been almost 8, 9 months now that the stock has been witnessing correction, and the good part is that of late we were seeing a bit of a base formation around 5,000 4,900 mark. The stock has recovered, and currently we are hovering around the long-term averages, and then we have a trend line hurdle also around 5,600 mark. So I believe that 5,600 is a make or break zone for Trent as of now. And once, let's say, we surpass this level, then probably we can fill a gap on the daily chart around 6150, 6200 zone. So it's a hold again with stop at 5350. But for fresh buying, one should wait for a close above 5,600 mark.
Okay, wait for a close above 5,600 mark for fresh buying on a trend. Any thoughts on DOMS? The stock has seen some correction over the last 5 sessions. I have a query here coming in from Dipankar. Hasn't really sent a pointed query, but it's not been a long time since it listed. But given the price action it has seen, or whatever data you have, any thoughts on this particular counter?
So what I remember, Ananta, that of late the company announced the numbers, and that day it moved up sharply, but it couldn't sustain those gains. And currently we are hovering around the 25-20 area, which coincides with the multiple moving averages resistance. So let's say once we close above this 25-20, 25-25 zone decisively, at least for a day or two, then only we can see a next leg of recovery, which can help this stock to inch toward 2700, 2820 zone. So as of now, yes, you can continue to hold your long position. You can in fact look for fresh buying also with 2380 as a stop loss and 2700 as the positional targets.
Okay. Those are the targets mentioned by Ajit. Hope you've taken note of them, Dipankar, and I hope that answers your query. But let's talk about Kirloskar Oil. That's one stock that, in fact, Alex has written in with a query on that particular stock, and he wants your thoughts for the long term on this particular counter. The stock has seen a 60% up move in the last 6 months. What is the long-term picture looking like here? It's 960 odd. Can it surpass 52-week highs? Because the horizon is a little long term.
Yeah, so we are seeing good base on base formation. Means it's a gradual recovery for almost 5-6 months now. Stock has recently formed a strong base around the short-term averages, and possibility of a breakout is high. So means in the next leg we can see the stock inching towards 1050, 1080 area. So yes, it's a good buy at current levels with 900 as a stop loss and 1050, 1100 as a positional target.
Okay, hope that answers your query on Kirloskar Oil. But Before I get on board my next guest, Ajit, I wanted your thoughts on two stocks, Vedanta and Hindustan Zinc. Vedanta, of course, considering its second interim dividend for FY26 on the 21st of August, and Hindustan Zinc has also approved setting up 10 million tons per annum tailings reprocessing plant worth 3,823 crore rupees. No direction as such when it comes to shares of a Hindustan Zinc or Vedanta. Uh, still no no fireworks as such. How do you look at this duo?
When it comes to the metal pack, as of now, JSW Steel tops the list, means the stock has recently made a new record high. Yesterday also it was, gaining strong traction with volumes. Vedanta in particular means we are seeing stability, which is a good part, means at least on the down days also we are not seeing any major decline. The stock has been holding strongly above the long-term averages. So probably we can see an attempt of a rebound towards 485, 458 to 475 in days to come. So yes, you can continue to hold your longs. You can buy fresh also with 435 as a stop loss. But Hind Zinc, I feel that it's an avoid candidate because still there is no sign of decisive recovery, nor the volumes are very, showing any kind of accumulation or something. So as of now, 445 is a strong hurdle for Hind Zinc. So in case if you have any long position, you can look to exit even at current levels and switch to JSW Steel or Vedanta.
Okay, GSW Steel Vedanta looking attractive, but not Hindustan Zinc at the current juncture. Just as we are talking about queries, one last query then. Syngene, what are the prospects? Anandaroop Bandyopadhyay wants to know your thoughts. Uh, how would you look at Syngene and Biocon at the current juncture? We saw pharma emerging as the top sectoral gainer last week, but came under selling pressure. The entire defensive lot has been under pressure in the last two trading sessions. Any thoughts on Syngene in particular and Biocon as
Yeah.
well?
So Syngene, it was a decisive attempt to cross the major hurdle of long-term moving average. In fact, for a day, it closed above that mark also. But again, the selling pressure was intense, and we are again back to the square. Means the area from where the recovery started, it drifted toward that level. So it seems like consolidation with the negative bias is likely to continue. So I would recommend to exit this stock and switch to the counters which are trading closer to their 52-week highs within this space. And for Biocon, Biocon is extremely volatile these days. Means we are seeing strong price swing in this range of 320 to 400. So after a failed attempt of a breakout above 400 mark, again we are hovering around the short-term averages. So probably a close above 370 can trigger further recovery towards 385, 390. But as of now, it looks sideways with slightly on the negative bias. Means in case if it fails to hold 358, we may again see a further drift toward 350 zone. So as of now, it's an avoid for fresh position. Existing position 350 should be your strict stop loss.
All right, that's about Syngene and Biocon. Hope that answers your query. And with that, we've come to the end of the query segment. And of course, we've come to the end of our chat with Ajit also. Ajit, thanks a lot for taking our time and joining in. As always, it's lovely chatting with you. Wish you a happy trading day and of course, good week ahead.
Thank you, Nandita. Thank you, and same to you.
Well, thanks a lot. Well, on that note, could you take a look at what the markets are doing before we get on board our next guest? Quiet, so to say, mixed picture when you look at the headline indices and the mid-cap end of the market. Nifty trading just about 18 points higher, 24,895, slipped below that 24,900 mark. The mid-cap index has slipped into the red and, it's trading lower by 0.3% or thereabouts. But the good part is that the breadth is still skewed in favor of gainers. 1370 gainers to 1061 declines. In terms of sectors, it was a mixed picture today as well, with the IT under pressure once again. But autos and FMCG were extending their gains. If you look at some of the top movers on the index and Reliance Industries, that's the top mover because Geo has discontinued its entry level 1 GB per day plan. And of course, Reliance Consumer Products has entered into functional healthy drinks. So beverages. So that's something that is moving stock of Reliance as well, and brokerage is also reiterated their positive views on the stock. So Reliance gaining on the back of that. Bharti Airtel as well up almost 3%. Hero Motocorp, Eicher Motors extending their gains. Kotak Mahindra Bank is trading in the green, but the rest of the banking names are not doing all that well. We saw the likes of ICICI Bank, HDFC Bank, IndusInd Bank, even SBI for that matter, all under pressure. But on that note, let me bring on board our next guest for today. Joining me is Ambareesh Baliga, a big market voice. Ambareesh, lovely chatting with you. There's been a deluge in Bombay, heavy
Yeah,
rains. I saw some gains on the Lal Street as well yesterday, extending those
right.
gains. But would you say that the good news, in terms of GST, is already in the price now? And the next thing to perhaps train our guns on would be on what happens on the tariff front. What are your thoughts? Because we also had that S&P upgrade
Right.
coming in terms of good news. So good news outweighing bad news now?
Looks like it. And it seems that we have seen an intermediate bottom, that 24,350. I think that clearly is the intermediate bottom because that was the time when we had all the adverse news coming in. And post that, we have seen the talk of GST reforms. We have seen inflation at, I think, a 6-year low. And now clearly the expectation is that Trump would do a U-turn, and especially whatever is happening on the global scenario, between Russia and Ukraine, the discussions. I mean, very clearly, I think Trump will have to do a U-turn. So a 25% tariff, I think, is something which is possibly acceptable at this point of time. And based on that, we should see, I think, a decent move up. And at the same time, I mean, since the earnings season is over, it was quite disappointing, but then it's already, I think it's already there in the price as of now. So, I mean, any sort of an uptick in earnings going ahead in the next quarter, I think that will be the other sort of trigger for the markets. And I think over the next at least 3 to 4 months, it would be the consumption theme which will drive the markets. And again, thanks to the GST reforms which we are talking about, I mean, good monsoons. Like, I mean, you have seen the deluge in Mumbai in the last couple of days.
Hmm.
But then I think this time the spread also is decently good of monsoons. I think that's more important, and that should, I think, again drive consumption. And last but not the least, I mean, the eighth pay commission expectations. I think that is the other one which will drive the consumption beyond November, December.
Sure. Let's break it down then. When you're talking about the consumption theme, we saw shares of Maruti rallying 9%, right? I think the small car segment was not doing well.
Absolutely.
And now with
Yeah.
lower GST on small cars, it's kind of a wish fulfillment for the likes of Maruti. Which are the stocks that you are, kind of, preferring now within the four-wheeler pack? Because M&M, on the other hand, is already doing well. Numbers were good.
Right.
They've also announced SUV launches recently. So, how would you really play the four-wheeler pack? Any preferences there? Your thoughts?
I think it should benefit all the four-wheelers. I mean, although the market is talking of the small cars because of expectation of the duty coming down from 28%, since that slab will be removed, I mean, all of them would be at 18%. But the ones which are being taxed higher, like the SUVs of Mahindra and Tata Motors, I mean, even there, I expect that the duty would come down by about 10%. Because although the additional your duties would remain, but since the base would be coming down from 28 to 18, they would also get the benefit of 10%. I mean, that's the feel which I have, and that's the reading which I have. So it should be beneficial for all the passenger vehicles across. And Mahindra clearly is making a mark with the new SUVs. The EVs are clearly path breakers, I would say. So I would be positive on across Mahindra and Mahindra, Tata Motors, as well as your Maruti. And as far as the two-wheelers are concerned, I mean, I would place my bet on Hero MotoCorp because that's one stock which had underperformed if you see the last 12 to 15 months. And now I think it's getting its act in place. New launches are happening, which are doing, extremely well. So that's the other one I would look at.
Hmm. I also want to talk about the footwear and apparel space, right? For footwear in particular, the likes of Bata, Metro brands, for shoes under 1,000 rupees, that would also, bringing down the GST would also, bridge the gap that they have with the unorganized players, right? So
Right.
in light of that, how do you really look at some of these footwear names? Some of them haven't really fired up, or they've not really seen any spring in the steps. Do you think it's a good catalyst for some of these stocks?
Yeah, surely it's a good catalyst, but then I would say it would be a good catalyst for someone like a Relaxo as compared to
Hmm.
Bata or a Metro, because Relaxo is the one which has a decent amount of variety below 1,000 as compared to these other two names. But then, yes, sentimentally it's positive. So we have seen that rally in Bata. And I would, like I said, I would place my bets on Relaxo as compared to a Bata because of this news.
Okay, Relaxo, looking good from the footwear space. What about Trent? Ambareesh, the stock, of course, took a breather after being the showstopper stock in 2024. We've seen a fair bit of correction. It has been such a rank outperformer that even okay sort of numbers don't go down well with the street. But
Right.
with, of course, this GST boost, is it a good time? Does it offer a good entry point now for Trent?
See, the earnings were fine, and as compared to earlier, we had seen some amount of growth on the same store growth. But going ahead, that's the big question mark which I have is whether they can show same store growth even going ahead. There could be some bump up because of the GST, because of the festive season. But at least longer term, that's the question mark which I have. So I would not really venture in and buy Trent at this point of time. The upside I see is possibly about 6,000, 6,100, and that's possibly a trading play and not an investment play.
Okay. Trent looking more like a trading play rather than an investment play at the current juncture. Any thoughts on cement? With GST going down, cement, of course,
Definitely.
has, of course, anyway been doing well, right? If you look at the numbers, far better than the rest of the sectors. Does it
Exactly.
provide another positive catalyst? Because some of the brokerage notes said that although GST comes down, but volumes may not pick up due to inelasticity. Your thoughts on that?
Cement, basically from a GST angle, may not make too much of a difference as far as the volumes are concerned. Just because it's coming down by 10%, we don't expect infra and the real estate players to buy more of cement, because end of the day, they'll buy cement based on the sort of orders and execution which they're doing. But then, in the last 3 to 4 years, what we have seen is the volumes had moved up, but the margins had not. But that's exactly what I see moving up going ahead, because there would be a supply and demand mismatch, because it takes about 28 to 36 months to put up a greenfield cement plant. And because of which, and looking at the new cement plants which are coming up, I believe there will be some amount of mismatch as far as demand and supply is concerned. Based on that, we'll see margins moving up, at least over the next 4 to 6 quarters. But I think the biggest beneficiary of the cement GST coming down from 28 to 18 would be the real estate players, because they are the ones who don't get that. The pass back or the adjustment of GST. What we call ITC. And because of this GST coming down, I think they would be one of the biggest beneficiaries.
Hmm. Okay. Real estate players would be among the biggest beneficiaries of this GST rate rationalization. But in other pockets like the shipping industry, so to say, there are reports that the Finance Ministry may give this sector an infra status soon, source based. But given the fact that some of these shipbuilding companies have seen a sizable correction and a comeback as well, do you see this to be another catalyst? And do you see that more steam left in some of these counters?
No, see, this will be sentimentally positive for the shipbuilding industry. But I think the biggest issue which most of them are facing today is capacity issues because they have orders in place, but you really can't build that capacity. Overnight. It takes much longer, and I think that execution risk is still there. So I think one has to be very, very stock specific, see as to which are the ones who are able to add capacities, fresh capacities, and they are the ones I think we shall do well going ahead. Because you really can't take orders beyond, for deliveries beyond 8, 10 years. I don't think anyone's going to wait that long.
Hmm. Okay, got your point. Yeah, last couple of questions really. What do you do with metals, particularly steel? Because steel safeguard duty is in place for 3 years.
Right.
That's of course a positive for the industry as a whole. So within the metal pack, would you look at ferrous now, or would you say that non-ferrous is the way to go?
No, I would surely look at ferrous because this is one area where the safeguard duty is there, and that should be beneficial. At least going ahead next couple of quarters. So something like a Tata Steel and a SAIL would surely be on the buying list at this point of time.
All right, that's the view. But one last question then. Given the good news on the GST front, S&P upgrade, and of course the consumption boost as a whole, would you change your forecast for what the Nifty could do for the next 1 year? As some brokerages said that we could expect a high single-digit returns on the index now. Would you concur? Because this is just the start, right? And thus far we have underperformed our EM peers. So is this the place where we are looking at a reversal?
It could be, but if you're talking of calendar year 25, I don't think the markets will possibly cross the all-time high which we had seen last year. The way I see it is we could be in a broad band of possibly 24,350, 400 on the lower side, about 25,800, 26,000 on the higher side. But then count 2026, I think we should see new highs based on the earnings upgrade, which we'll see. Because I clearly see that the earnings should start seeing upgrades of, if not in Q2, at least from Q3 onwards, I think we should start seeing those upgrades. And based on that, we should be able to see much better levels for the Nifty.
Hmm. Last question then. I just want to push by luck and ask you another question on some of these names, AC makers in particular, the likes of PG Electroplast, Voltas, numbers weren't all that good due to the early
Right.
onset of monsoon and, low demand for room ACs, etc. But with this push and of course the 8th pay commission as well, some brokerages say that the demand for AC will go up substantially. Given the correction that some of these stocks have seen, looking like a good entry point.
I think it's a good entry point because most of them had come out with decently bad earnings, and because of which we had seen correction in quite a few of these stocks. And this GST update, I think, also should be extremely positive for this space, and which again should be driving the demand because today, like all of us know, luxury. AC is clearly not a luxury; it's a must. So the sort of demand which we'll see because of this GST cut, I think will be extremely good, and I think that's what should actually play out from November, December onwards.
All right, so that's the view on some of these AC makers. Good numbers haven't been all that great, but of course, with the GST rate rationalization, we could see an earnings boost for these companies as well. But with that, Ambareesh, as always, it was a pleasure, and I look forward to more
Thank you.
conversations. Have a great day and a great week ahead. Of course, let's hope that this deluge, stops because it's been incessant rains, right? And of course, life
Absolutely.
tends to come to a standstill.
Yeah. So I think all of us need to be safe, especially in Mumbai.
Yeah, that's true. Well, I'll see you then. Thank you. Thanks a lot for joining in. Well, on that note, of course, we've come to the end of this edition of Opening Bell. Just want to see what the markets are doing. We are where we were at the start, just about 38 point uptick on the index. 24,900, we're managing to hold on to those levels, but no big moves, no fireworks as of now. But things are looking okay, not all that bad. The mid cap index is off session lows. It's still in the red, but the breadth of the market is also skewed in favor of gainers. That's another good news. Bank Nifty is under pressure. Some of these the private banking names like ICICI Bank, HDFC Bank, IndusInd Bank, Axis Bank, all of them were seeing red, and so was SBI. But good news is that index heavyweight Reliance Industries is providing the much needed support to the index. That stock is up in excess of 2%. All these two-wheeler names and auto names, continuing to be in top gear, the likes of Bajaj, Hero, Tata Motors, Eicher Motors, all of them trading in the green. Kotak Mahindra Bank, bucking the trend. Other private sector names under pressure, but Kotak Mahindra Bank is up 0.5%. Maruti Suzuki up another 0.5% after the 9% up move yesterday. And some of these hospital stocks like Apollo Hospital are also doing well. But what's not doing well are some of the names, NBFC names like Shriram Finance and Bajaj Finance. Those are the top losers on the index. SBI Life, that saw a good up move yesterday in the first half, slipped into the red today. Ultratech Cement also under pressure. And some of the consumption names have also slipped into the red, the likes of Nestle and Eternal continues to be in the red as well. And from the auto pack, M&M has slipped into the red as well. But with that, I would like to thank you for taking out time and joining us for this whole duration of the show. I'll see you at 3:30 p.m. with Yatin on closing bell, so don't forget to tune in for that as well. But for all those who are in Mumbai, please stay safe. Extremely rainy day, of course. Red alert has been issued by IMD, so stay safe and stay indoors in case you can afford to do that. Thank you for watching, and I'll see you on the other side.